Alright, yeah. It's currently 10:11 p.m. I'm gonna go over a trade that I took earlier today at 9:35 or 9:45 since the late charts, and 9:55. Let's just go over what I did. There was like a lot of fair value gaps today. I knew that we were gonna react to these two fair value gaps before we even came into market open. Pretty sure my bias was bearish. Wait, actually, see, like, since it was like earlier today, I low-key forgot what my bias was. Oh yeah, my bias was bullish. Cause I was thinking about taking these lows and then we could push higher, which we didn't do, but my bias was bullish, especially because we had this gap here. Oh shit, my bias was bullish, especially because we had a daily fair value gap above. I was thinking price was gonna go and try and tap into that, and then we can maybe be bearish the next day. But yeah, let's go ahead and go 30-minute, because that's what I always start with. Market 30. Where's it at? Market 30. London high. London low. Swept the London low, reacting to this high time frame gap. Push higher, but let's just forget about that right now. We have this Asia low. We don't have an Asia high. Swept by London. So it coming back down and sweeping Asia low, or us sweeping Asia low, would make sense in order to push higher, but we didn't. Marked out this high time frame high. Let's go ahead and check 30-minute on NQ. Figure out what these were. I'm pretty sure these were my points of where I would go break even and take profit, I think. But yeah, we have London high, then again London low. London low was actually swept here. I'm pretty sure that was another reason I was thinking bullish, because we had an SMT at the London lows, even though we ended up sweeping them later on. Asia low here. Didn't mark out these ones. Okay, well, we have this high here, high time from high. We have these lows down here, which is a low probability. That's why I didn't even mark this one, because we're not going to get to those. I already knew that. And I moved up to the 4-hour. Yeah, I just marked out some of this stuff, you feel me? I didn't bother marking out this 4-hour gap, since we just had this huge wick. I know it still counts as being a valid gap, but I know this idea that I have is valid, where since we have this huge gap on the 4-hour, if I'm trading on the 1 minute, I would want to see the 4-hour gap get respected right as we tap into it, or like a couple points into it, so that we can immediately take a trade. Why would I want to wait for what, like a 15-minute confirmation? Because like, if we look on the 15-minute where that 4-hour gap was, see, like, if you look on the 15-minute, then it'll show you. Wait, is this the 4-hour gap that I didn't mark? Hold up. I don't think that's it. Alright. Because it's still valid on the 4-hour, but if we go down to a lower time frame, we'll be trading at, where is it? This shit? No, this shit. Like, the 15-minute push through that all the way and actually tapped into this gap instead. So that's why I marked this one out. Because, like, say it was a 1 minute, I would want to see price tap into it, then immediately start reacting. Like right here, this would be a good example of that. Maybe on the 5-minute. So like, that would be a good example. You see a bullish or a bearish reaction from this gap. Like, okay, now probably be looking for shorts after that, since sweeping this liquidity, even though this is Asia session. But either way, yeah, that's why I didn't mark it out. So go back to the 4-hour. Just look at the highs and lows that we marked out. Bias is bullish today, especially after sweeping this high time from liquidity 2 days ago. So yeah, and I was thinking we're aiming again for these fair value gaps, maybe even all-time high again. So yeah, and I didn't mark this one either, because I'm pretty sure this is a daily gap. So why would I have a daily gap and then mark the 4 hour above that when I should already be expecting the daily gap to be respected? So didn't mark that one out. Yeah, we just have some gaps. Pretty sure these are other time frames. Marked out these lows. Super low probability of those getting hit. So now let's go down to the 1 hour. Before 8:30 is obviously showing bullish structure. Even though we swept liquidity here, I don't think that's a significant enough draw on liquidity, and I think we would want to retest this gap again and this gap here. So, I mean, even though we didn't respect the gap, we're actually pushing above it. We did at least go to that gap to fill it, which made my bias correct. Marked out some lows and highs, blah, blah. Everybody knows what that is. We have this hourly gap that I said was going to respect it much more than the 4 hours. So I just marked out this 1 hour instead. And we have this, what is this? It's like a 30-minute or some shit. Oh, it's a 15-minute. Okay, well, the reason I marked that 1 hour on ES and then a 15-minute on NQ is that I like finding fair value gaps that are in tune with both ES and NQ. So if one gets inverse, or if there's like big wicks on the 1 hour and there's no gap here on NQ, but there's one on ES, I'm not really trusting the one on ES unless I find like a 2 hour gap here, 4 hour gap, or 15 to 30 minute. And if not, then I'm not trusting this gap and I wouldn't mark it out, which is actually what I did. I'm just not going to find those right now because I don't want to. There was some gaps that had that. So, yeah, what the fuck? This needs to come in. Alright. So, yeah, we just marked out some gaps. Then thank you. And then last thing I do is check, like, oh, do we mark out some value draws on liquidity? So I check the daily, and then that's when I seen, okay, we have this daily gap above that we're most likely going to retrace into after sweeping this high time from liquidity. So yeah, that's what we marked out. We also have this huge gap below, so if you want to resweep this all-time high and then come down to this gap, that would make sense. Or if we make a gap on the way up. So now I scaled down to the 15-minute, I'm pretty sure that's what I did. Then I was just looking at what price action was doing. So I like marking out the high time frame gaps, and then once I go down to the lower time frame within these price moves, within these legs, I try to find like 15-minute gaps that price can react to off market open, because price usually sweeps liquidity and reacts to a gap. And I actually see that 15-minute gaps get reacted to like usually like all the time, because like on the leg of sweeping liquidity, a 5-minute gap is created. We always retrace into that, like always. So yeah, I just look at what pre-market does, mark out some low time frame gaps within those legs, done that within pre-market action, price action. And then I also mark out, I didn't here, but oh no, this is 10. I usually always mark out, like the pre-market liquidity as well, because I see that price likes to sweep that as well, besides just London and Asia high lows. So yeah, we just seen price action. I seen that we swept this liquidity, so I was like, okay, we're most likely to come. So look at this is 7, right? Where's 8:30 here? So I was thinking we're most likely going to sweep this liquidity as well as tap into this gap that I put on ES and NQ, which we were already in there. So I was like, okay, we just need to see good reaction as well as sweeping liquidity, which we didn't, but we swept the London low, which was enough for me. Then, yep, I did the same thing on ES. Moving down to the 5-minute. Same thing, just look at price action, what structure is looking like. We actually had some chop right here. So here's 8:30. So usually by the time like I'm doing the 5-minute, it's already 9:20. So I have 10 minutes just looking at this price action here mainly. Then looking at this gap, which I already marked out. So from here, I was thinking, yep, we're going to come sweep down this low for sure, London low. Since this already swept as well, I was like, okay, this is probably just coming down to sweep that, and then we could be looking for longs. And I took 2 longs today. One was a loss, took it too early, and then this is actually a long video. I gotta hurry shit up. So right up, market open, looking at 3-minute for a little bit. Sweep out these low. Sweep out this low. Then I move down to the 1 minute. I don't really mark out 1 minute gaps anymore because I could just like, it's kind of useless, waste time. I could just see it by myself. Where the fuck was it? Oh, I'm pretty sure it was on IQ. Idiot. So in the 1 minute, after coming down and sweeping this low that we created in pre-market, I was like, okay, boom, now we can be looking for long, especially because ES tapped into, okay, what the fuck am I doing? I need to stop doing that. But ES tapped into that high time frame gap, right? So I was like, okay, now NQ's, pretty sure it was a SMT, which means NQ is a leading index. Let me just check. Pretty sure that's where I took it on NQ. Was it here? Yeah. Pretty sure it's these two lows. But yeah, we do have an SMT here, bullish. So then I saw that, because I'm always like flipping back and forth between the two indexes. Oh my gosh. Whatever, we don't need that anymore anyway since we're past that. But yeah, see, we do have a SMT here at the lows. So I took a little bit too early. Once we tapped into the gap on ES and we started reacting on NQ, we didn't even tap in on NQ, but seeing this huge push, I was like, okay, I just need a reaction, like a pullback, so I could take a long. We pulled back into this 1 minute inverse here. See, we wicked it. So right on that candle closure, I entered. We did have a little push forward, but and I didn't believe in this 1 minute gap. It's so far back, it's kind of useless. But then we push up, we get stopped out. I'm like, oh hell no. I would usually just stop, but today I'm like, bro, this is definitely going up. It's bullish as fuck. So we tap into equilibrium. 5 minute order block here. It's like a first time in a while that I actually use an order block. But I seen that, I was like, let me see what else there is, because there's no gap so far. So we have this 5 minute order block after a liquidity sweep. So I was like, okay, boom, we're tapping into this order block. I just need to see a reaction out of it, especially because ES was in that gap. So I was like, okay, now we have double confluence, one on ES, one on NQ. So I was like, okay, now it's even higher probability that we're going to go up. I like when I see that. I like when ES is in a high, like, or say one index is in a gap and the one is respecting another confluence. I'm like, okay, this is easy trade right now. So right when we get a reaction off this order block, we also got a reaction on ES. So I took that long, just waited for the first bullish candle. Didn't even wait for it to exit the order block. That was enough for me since we already swept this sell side. My TP was this pre-market high. I could have put it at this gap, but I was like, just in case, because ES was in front at the time, I'm pretty sure. So just to make sure I don't get, it doesn't come back down and stop me at a break even for the for bullish SMT or bearish SMT. Because it could always retest the gap, which we did after I took the trade. But so we push higher, we retrace again into the order block, react again, and that's when we really push off. We create this 1 minute gap. Once we wick into this gap, that's when we get TP. So here, I promise you, I knew I could have been taking shorts down to this gap here and sweeping out these low resistance draws on liquidity. But I usually don't want to be like over trading, so I literally just took 2 trades today. 1 loss, 1 win. The profit outweighs the loss, so profit today would have been made. I literally always do this. Like, I see that we sweep liquidity. I could literally just take a reverse trade. We inverse this gap. Let me actually see where I would have taken it at. Tap into the high time frame gap. We respect it. Now I'm just waiting for an inverse gap since we already swept buy side liquidity. And we have this low resistance draws of liquidity. So I'm not even gonna check ES right now. I'm gonna just go off NQ. Let me check if there's any like 3 minute gap, 5 minute gap created in the leg up. We have this 3 minute gap. I want to see it disrespected on the 1 minute. And that's literally just enough for me, since we already have a high confluence, which is a liquidity sweep. So once you see this get disrespected, I want to see a retrace into it. So it's like, maybe that was around here. I honestly would have taken it right here, which would have almost stopped me out, not gonna lie, because I would have taken a short. Like around here, or this candle or this candle. I'm gonna just say it's the bullish entry. Would have put it at this high, so I wouldn't have got stopped out, but I would have take profit. Then this is draw in liquidity. So since it's 2.46, I would have been safe and put it like a 2.3. Because if we resweep this high, I would honestly invalidate my trade. Because since my bias is already bullish, I would be thinking that means we're probably going to push past this gap. But just to be safe, I'm going to just put it there. 2 to 1. See, like, I don't like seeing 2 to 1s. So I would have just probably left that at a 2.33. Then boom, we would hit TP. And also this line here is break even, by the way. So yeah, trade for the day. I actually went in depth for once. My past videos have been like 3 minutes long. But yeah, hopefully we can catch a trade tomorrow. I'm not going to school. I feel kind of sick. Friday, no news. Should be a decent price action, I'm expecting. And I'm honestly expecting what right now, from what I'm seeing right now. I need to wait for overnight to end, and overnight market in the morning. I need to see what it looks like, but as of right now, it's looking like I would honestly be waiting for bullish. I would be expecting bullish price action. We might come down and sweep a little lower real quick and react to this gap here, but honestly expecting to wake up in the morning and see that we're in the range to sweep this all-time high. So yeah,